From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, President Trump asks Apple CEO to move iPhone production from India to the US market.
Plus, the CoreWeave CEO joins on the back of the company's first earnings as a public company.
And the CEO of eToro joins us after its upsized US share sale as the IPO market opens back up. But first, we check in on this market, which maybe it's just got a little bit over-exuberant and dials back on the day. We hit technical overbought territory on the relative strength index when you're looking at the NASDAQ 100 yesterday. Today, we pared back, but only by 0.3%. Ed, we're on track for a 5% gain so far this week. And it seems as though big tech just comes off of some of those highs as the macro data paints maybe a slightly cooler inflation environment than we were thinking.
We see the same behavior in Apple, which is our top story. Muted declines, pairing some of its more significant declines earlier. Hyde's US-listed shares, that's the publicly traded arm of Foxconn, the company assembling the iPhone, softer, in part an earnings story, but in part the President of the United States with severe words for Apple and Tim Cook. Listen to this.
I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I've treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India.
Let's get straight to it. Bloomberg's Mark Gurman gives us the context, because before we go as to how realistic this could be, Mark, I want to understand for our audience just how much we'd seen production shift to India to satisfy the US market.
Yeah, thank you so much for having me. These are truly, some harsh comments coming from President Trump. Obviously, Tim Cook has had no choice because of the threat of tariffs to move a lot of production of the iPhone and other devices to elsewhere, right? So for the most part, they were building things in China, but now they're building probably a third of iPhones in India. They said on the earnings call that the majority of iPhone production for the U.S. market in this coming quarter is going to be done in India. They certainly have aggressive plans to expand even further in India for iPhone production. Again, that's for the U.S. market. And this is about avoiding trade war type of situations between the U.S. and China, geopolitical issues having to do with China, but also because of these tariffs. A lot of this came into place because of the anticipation of these tariffs and how much more it would cost Apple to produce iPhones and how much that would snip into their margins if they continue to export from China to the U.S. So definitely something Apple had to do, and it's understandable that with Donald Trump's agenda, why he would not be so happy about it.
Mark, I want to recap some of the data you just shared, which is that basically almost 90% of iPhones are currently made in China, and the balance of iPhones are made in India, around 30 million units per annum. Did we learn anything from Apple's most recent earnings or in any of your reporting since on how Apple is planning for the long term on its production of the iPhone, irrespective of what the White House says?
Well, right now the plan is to produce the vast majority of iPhones in India for the U.S. market by the end of 2026, so about a year and a half from now. There's still going to be a nice chunk of iPhones made in China. That is the higher-end Pro models. They're working on basically 2 new iPhone models for the 20th anniversary. Obviously, Steve Jobs unveiled the first iPhone at the beginning of 2007. So across the end of 2026 and the end of 2027, they have 2 major new iPhones coming out. They have a foldable iPhone, which would compete with the Samsung Fold, the Google Pixel phone, some of the other, Chinese-made foldables. They also have a 20th anniversary glass wing phone coming out at the end of 2027. Uses very advanced curved glass, very advanced new chips, very advanced new technology. They're not going to be able to pull that off outside of China, so those aren't coming to India from the get-go. But to I guess the larger point, there is no plan in place to begin building iPhones in the United States. I have an article that I wrote in early April which outlines why this wouldn't happen, the engineering talent, the manufacturing skill sets, the manufacturing space, the cost implications. All of that essentially makes it impossible for Apple to produce iPhones in the U.S. at any rational, reasonable rate or scale.
Bloomberg's Mark Gurman, thank you very much. Let's get more with Bloomberg's Mike Shepard and the political side of this story in Washington, D.C. And Mike, in the last 48 hours, the president has taken to the stage, so to speak, and called out Jensen Huang, the NVIDIA CEO. He called him my friend who's in the room. 48 hours later, he calls out Apple CEO Tim Cook with less kind words. This is a president who is using the public forum to try and get tech companies, American tech companies, to do things his administration wants.
Well, that's right, Ed. He is using the public space to pressure these companies, and he is not shy about doing it. And it is a tactic we have seen before. Think back to the very early days of the administration when SoftBank was pledging $100 billion of investment in the U.S., and Donald Trump turned to Masayoshi Son. This may have even been before he took office. How about doubling it? Could you make it $200 billion right there as the two men were standing at a lectern with the announcement being made? And it is a tactic we have seen repeatedly. When the Stargate announcement was made, again, he was asking $100 billion. Why can't we make it $500 billion? Let's scale it up. And so the president really is pushing companies to help fulfill his agenda here, which is to expand the manufacturing base. And he is leaning heavily on the tech industry to do so. Obviously, others like aviation and car making, too, are feeling that pressure. But tech is really taking center stage in this, and you can see that with the connections he's tried to make, as you mentioned, Ed, with Jensen Huang and, of course, with Tim Cook, someone he's had a relationship with since the first administration.
And Mike, thus far, Tim Cook, or Apple indeed, has not responded publicly to the president's comments. But they have front-run, perhaps, the president's comments in terms of trying to signal the investment to come. $500 billion, they say, that was going to be invested in the U.S., but that's for chips, or indeed the AI focus. It's not for making iPhones. Realistically, are we going to see Apple try and respond by more investment, but just not in terms of iPhone production?
Well, it's a difficult question. The president made very clear what he wanted. He wants U.S. phones made here in the U.S. and not in India and not in China, certainly. And to do that, perhaps Donald Trump needs to read Mark Gurman's piece from back in April laying out all of the difficulties. But, of course, the fine print, those kinds of details, the president typically has not paid attention to that. And it is up to companies really to use the time that they get with Donald Trump and his aides to show, look, it will be very difficult to do this. This is what the cost would be. Some officials have talked about, well, maybe there could be some savings when it comes to AI, when it comes to processes. And yet here also we do have a talent deficit. We don't nearly have enough engineers and assembly line talent to be able to produce the vast number of iPhones for the U.S. market that are currently planned right now in India.
Michael Shepard, great to check in with you. Thank you. Meanwhile, let's return to what President Trump has managed to achieve for NVIDIA and the like, for example, in the Middle East. The tour is opening up, though, a rift within his own administration. Trump's AI deals, they're raising alarm bells for China hawks in particular. Concerns grow that the projects could put U.S. national security and economic interest at risk. Let's bring in Riley Griffin, who joins us for more. This is a really well-read story at the moment, and this is all to do with basically how we ensure that NVIDIA chips going to the Middle East don't end up in China's hands.
Yes, we've seen this week in speaking with several Trump administration officials that they are quite uncomfortable with the fast and loose way that these negotiations have happened. And particularly, we're interested to see that there is concern about the way White House AI advisor David Sachs is a part of these negotiations. Trump administration officials feel that he is not paying sensitive attention to the economic and national security concerns that you mentioned.
I think it's important to explain to the audience the basics of the relationships between these nations. The original AI diffusion rule took into account third countries, right? Which was the idea that if you sell a technology to a nation like Saudi Arabia or the UAE, those nations also have a close relationship with China, an economic relationship. There are Chinese nationals working in the fields of AI in the UAE, for example, and that they might give access indirectly to China, to US technology. Has the US actually answered any of that in everything that's happened in the last 4 days?
What's amazing is that the diffusion rule itself has been under review. In a way, these negotiations have front-run the answer to that question, Ed. And we're seeing congressional Republicans raise concerns about this process as well. This isn't just happening behind closed doors. It's being discussed out in the open. But there are two sides of the Trump administration, one in which we're seeing concerns about these chips simply being in other countries, potentially threatening American dominance. But David Sachs himself, the AI White House advisor, believes and has said publicly that having American technology being used abroad helps to ensure the dominance, helps to ensure that countries aren't turning to China for that same technology.
One example, G42, an investment firm focused on AI that has close links not just to the nation of China in the UAE, but also a relationship with Huawei, the national tech champion. Bloomberg's Riley Griffin, top reporting. Thank you very much.
CoreWeave shares pushing higher today. They're posting their earnings after the bell yesterday. There were some concerns around profitability, the forecast. But really, this is as CoreWeave works to bring forward spending in an effort to meet consumer demand that is just ratcheting higher and higher. CoreWeave CEO Michael Intrator joins us now on the back of yet a deepening tie-up with OpenAI. Their own Ed Ludlow's been writing about a deal worth yet another $4 billion. You'd already sealed revenue climbing to some $11 billion deal with them previously. Michael, are we seeing insatiable demand, and how can you meet it?
Yeah, thank you for having me on. The demand for the product that we deliver has truly been insatiable. It's resulted in us having an opportunity to beat our guidance and raise our guidance for the year and beat our earnings for the quarter. As we continue to try to pull in infrastructure so that we can deliver it to our clients that need the type of software stack, that need the type of compute that we deliver in order to drive their products into the market.
I want to just pick up on the beat, because wow, did you beat in terms of revenue? And certainly we see what 400% growth is extraordinary. But talk to us about the forecast on profitability, because the area of investor concern is ultimately your capital expenditure. You're having to raise capital spending to what, up to $23 billion? Just vindicate that for the market.
Sure. Look, the structure of our business is built around the idea that we have success-based financing. And so when you see us go out to the market and raise our capital budget for the year, you're seeing us raise money to fulfill our obligations under signed contracts for offtake agreements. It's really a wonderful indication of the demand for our product and our unique ability to deliver such a performant solution to how you drive compute into the artificial intelligence ecosystem. It's really been it's an interesting aspect of the business that we've put together, but the increase in capital is representative of the client demand.
Michael, I think the sole outstanding question that industry has for CoreWeave is what is the proportion of workload you're running that is inference versus the proportion of workload you're running that is training. They're searching for a very specific number, and we can get into why.
Yeah, so I'm going to disagree with you. I'm going to say there's a few more questions that we're still working through with
I got more.
But look, I said this on yesterday's earnings call, right? There is no trend that makes me more excited about the prospects of our business than the continued increase and velocity of inference. Because at the end of the day, what inference represents is the monetization of all of the investment that's going on into artificial intelligence. It is a representation of the AI labs, of the enterprise clients that have invested enormous sums of money into the compute, into the software, into all the aspects of it, actually turning it on and having clients use it to improve the quality of their products delivered to their clients. It is by far the most important trend that I watch every day.
This is your first quarter as a public company, right? And if you scale back to the basics, it's buying GPUs and renting out the GPUs. And that becomes a little bit like a low-margin commoditized business, prima facie. What is it that you're doing that's the value add? What is it that's making data centers more efficient?
Yeah, so this is one of the kind of recurring trends, is that people trying to understand the compute requirements for artificial intelligence are relying on the best proxy they have, and that is the legacy cloud. And they're looking at it and thinking about it as if it is a commodity service. The reason that these clients, the reason the most demanding consumers of this infrastructure come to CoreWeave is because of the way that we integrate the commodity hardware into our specific software solution, which extracts such incredible performance gains and makes it so incredibly effective to build models, to run models, to be able to ultimately build their business. It is not a commodity. It's really difficult to run this infrastructure. It's really difficult to build this infrastructure. And CoreWeave's entire business, truly from the data center all the way up through the software stack, has been built around the concept that we are decommoditizing it, that we are providing enormous value on top of the compute. Our latest acquisition of Weights & Bias, that's a great example of how our software stack will fundamentally decommoditize the products that we're delivering and imbue the products that we have with incredible value.
CoreWeave CEO Michael Intrator, it's great to have you on Bloomberg Technology. Congrats on your first quarter as a public company. We want to welcome our worldwide TV and radio audiences. We look at shares of investment platform eToro, stabilizing a little bit after a pretty hyperbolic debut in public markets. Yesterday, the competitors of Robinhood began publicly trading at $52 a share. The upsize IPO raised nearly $620 million for companies and investors. We're joined now by eToro CEO Yoni Assia. Yoni, for both Caroline and I, it's a little bit of a sort of full circle story because I'd say over the last decade or more, eToro is a company we've probably most consistently talked about. Finally, you've gone public. Actually, when shares started trading, it was well above $52. How does that feel for you?
It's an amazing feeling. You know, the last 2 weeks on the road show, being inside capital markets here in the U.S., now listing on NASDAQ, a super exciting journey, 18 years in the making of building eToro, the world's largest social investment network, and now our customers can trade eToro on eToro.
Educate the audience that doesn't necessarily know about eToro. What is the proportion of stock activity on the platform versus, say, crypto? What is the mainstay of your business?
So we're doing both. Customers today on eToro can trade stocks from over 20 different capital markets, as well as more than 130 different crypto assets. We started the business in Europe and the UK. Our largest market expanded to Asia, UAE, and now the US as well. And our customers, when they trade, they share all of their trading activity, and you can actually see the portfolios and the track record of our customers, and you can automatically copy the most successful investors on the platform. So it's not only about trading yourself, both crypto and stocks, it's about being able to see others that are successful and copy them automatically. And the ratio between stocks and crypto changes in market dynamics. Last year, 25% of total net contribution was actually crypto trading activity. Years when crypto was in a bull run like before, sometimes it's up to 62%, so it really changes with the markets.
We keep comparing you to Robinhood, and at the moment, you have a social nature, of course, which you were spelling out in the way that you can copy those and invest like them. But with Robinhood at a 52 billion market cap and yourself at a 5 billion as it currently stands, how do you close that gap? How do you show that you're more close in terms of competitors?
I think eventually a lot of great companies are aiming at a very, very big opportunity, which is the largest generational transformation of wealth in history. $84 trillion here in the US are going to move from older generations to younger generations. In Europe, not that far behind, $60 trillion are going to move from older generations to younger generations. And I believe that our generation expects to trade, invest, and save in a digital native solution. And we're providing more than just the ability to trade directly in the markets. Through the copy trading patent technology, we provide people to automatically copy top investors from all around the world, as well as more than 100 different smart portfolios where we actually have our own chief investment office with 16 market analysts across the globe who help our customers basically find portfolios like thematics, driverless cars. We're just launching now also market neutral strategies, learning from the hedge funds I met here in New York. So we're able to create more than just self-directed trading, but actually the entire world of investments through smart portfolios and copy trader.
And that's as the business model matures, Yoni. It's interesting that you sort of said you have got yourself to a more mature state than back in, say, 2021 when you were looking at going public via a SPAC. Just tell us how different it looks now and what happened then to make you push to go for an IPO this time.
I think, we call 2022 the year of education. A lot of our customers learned that markets don't always go up. And we were focused initially in 2021 really at growth at all costs strategy, very sort of VC-minded, let's just spend money to grow. Okay. And I think what 2022 taught us is to change our strategy to profitable growth. And we've significantly scaled up profitability in eToro with more than $300 million of adjusted EBITDA profit. So I think that's the significant transition that we've done in the private market, bringing us to profitable growth, which is a strategy that I believe is more fit to public markets.
There was a lot of demand, and now we see a lot of more IPO sideline waiting companies wanting to follow your tracks. Yoni Assia, it's great to have you back on the show, CEO of eToro. Thank you.
I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I've treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India. We want you to build here, and they're going to be upping their production in the United States, Apple. So Apple's already in for $500 billion, but they're going to be upping their production.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Caro.
I mean, we think about the ramifications of President Trump following his call on Apple CEO Tim Cook there to stop building so much in India, satisfy the Indian demand in India. You want to satisfy US demand closer to home. It's extraordinary, really, that shares managed to bounce off of their lows. We're back flat on the day, more about the macro picture here in the US, maybe some resiliency when it comes to the inflationary data that we're seeing, and retail lackluster, but not a disaster. Ed, we've got to dig in more to what's happening in terms of Apple and its call upon its own supply chain right now.
Okay, let's get out to where the action's happening. Bloomberg's Anne-Marie Horden joins us now for the latest from Donald Trump's visit to the Middle East. In AMH, he's used the public forum, so to speak, in the last 48 hours to specifically name-check technology CEOs. Some positively, for example, Jensen Huang, and some more severe words for Apple's Tim Cook. What have we learned?
Right, this is the second time on the president's Middle East tour that he actually called out Tim Cook. The first time was on Tuesday in Riyadh. He looked out into the room and he said, my friend Jensen, you're here. He said, but notably missing is Tim Cook, but you're here. And then before he touched down in Abu Dhabi, he was talking about Tim Cook once again in Doha. He was talking about the fact that India might be prepared to, what the president said, literally lower their tariff rates to zero. And then he said, but I'm having a problem with Tim Cook. And I spoke to him about this yesterday. Why are you moving all your manufacturing to India? We let it go that you built all these plants in China. We want you to come to the United States. What's so interesting, of course, about this, the president has been flanked by corporate America, especially tech executives, throughout this entire trip. And notably missing was the Apple CEO, and the president found time to call him back. What he finds, I guess, very frustrating and disturbing to him. And the president said, though, that he's going to be moving that manufacturing manufacturing to the United States. That has not been what Apple's been talking about. They're talking about de-risking from China, willing to go into India, potentially maybe more conversations about investments in the United States, though.
And of course, investments still coming with the Middle East. And it's interesting that a lot of that is focused around access to AI, sophisticated chips going to where you currently are, whether it's Abu Dhabi, also over in Saudi Arabia. But this is ringing alarm bells within the president's own administration, Anne-Marie.
Yeah, that's right. And that becomes the national security concerns around all of this, getting what many would consider these Gulf countries as geopolitical swing states. This administration, especially some of the China hawks in this administration, and even China hawks, Democrats in Washington, want to make sure that the technologies does not leak to China. We saw a huge win for the likes of NVIDIA and AMD in Saudi Arabia. We are on the heels waiting for a potential announcement here in Abu Dhabi of some sort of tech cooperation when it comes to AI. This story started in March. I reported about Sheikh Tahnoon coming to the United States in the Oval Office, and then UAE announced that they were willing to invest $1.4 trillion when it comes to AI and building data centers. But in order for them to do that, they need to get their hands on the chips. And we have reporting, and potentially we will see this come across the finish line while the president is in the Emirates, that they would likely allow 1 million high advanced chips from NVIDIA coming into the country. Key though, Caroline, to your point, for this to happen, they need to make sure that that technology does not leak into the hands of Beijing.
Bloomberg's Anne-Marie Horden, thank you very much. The European Union today accused TikTok of breaking digital rules by not being transparent enough about advertisements. Chinese-owned social media platform says it's reviewing the decision. It's the latest regulatory move by the bloc against so-called big tech. I want to get to more on how the European Union is approaching tech regulation and development like AI, and bring in Henna Virkkunen. She's the European Commission's Executive Vice President for Tech Sovereignty, Security and Democracy. Executive Vice President, welcome to San Francisco and to the program. Actually, you heard Anne-Marie there discuss a number of issues on the global stage. On your agenda and your calendar this week, I believe you've met already with Tim Cook and Sundar Pichai. You will meet with leaders like Anthropic's Dario Amodei. What were those conversations about, and what was the focus for your visit?
Especially, of course, I want to meet American tech companies because for them, European Union is the biggest external markets, and many of them, they are having more users in the European Union than in USA. So, of course, it's very important that we have good dialogue with the tech companies. And especially in the European Union, we want to boost investments and innovations when it comes to technologies, and we want to make sure that, for example, in AI, we are building our own capacities also on AI. So especially we are speaking about our innovation agenda, where we are willing to boost investments, innovations, create one single market, simplify the processes. So we want to make Europe faster and easier for businesses.
The top story in the world today is the idea that the President of the United States has made an appeal to Tim Cook to move production of the iPhone, many millions of iPhones in Europe, from India to the United States. Does the European Union have an offer to American technology companies to think about moving some of their industrial base to the bloc?
We have, of course, our own strengths when it comes to European Union. So we are a very stable place for investments, of course. And I think we have also very predictable regulatory framework also. And, of course, very talented workforce. So I think these are our great strengths in the European Union. And we really want to encourage also more investments and innovations in the European Union when it comes to technologies.
Executive Vice President, it's interesting that you say a predictable regulatory environment, because many executives from big tech companies find it a frustrating regulatory environment. They think that it's too tough. What would your response be when you're going to meet Mark Zuckerberg in particular, who has lobbied the President of the United States, we understand, because of some of what he sees draconian regulation coming from the EU?
What we want to make sure in the European Union is that we want to have a fair and safe and democratic environment, well, also when it comes to digital world. So we have very clear rules. So we don't think that it's good to have, for example, monopolies, because those gatekeepers, they are often blocking them new innovations to enter to the market. So we want to make sure that we have fair competition, we have a level playing field for everybody, and also when it comes to big online platforms, they also have to take their responsibility there to make sure that they are not, for example, spreading illegal content or selling illegal products, and they have to take care, of course, for example, of safety when it comes to protection of minors, for example. So we have some very important priorities now we are also discussing with our online platforms, and especially the priorities are very much connected to our democratic processes and protection of minors, for example. And transparency is something that we are also obliged from the very large online platforms, because they have a great economic power nowadays in the world, and also a great power in our society. So that's why it's important that they are also respecting our rules and values.
And your fines, and you did just levy, what was it, 500 million euro fine to Apple recently, 200 million euro to Meta, because you feel that they didn't align themselves with the Digital Markets Act in particular. But some would say those fines were smaller than expected because we're worried about the repercussions within the tariff negotiation. How do you respond to that, Executive Vice President, that perhaps you're going softer because suddenly Trump is going harder?
It's not something that we are seeking, that we are posing fines for the companies. Of course, the main idea is all the time to make sure that everybody is complying with our rules. And the main tool, how we are working with the digital companies, is to have all the time dialogue with them and look at what we are expecting from them and how they could comply with our rules. And of course, all of them are always defending their business interests, but I think we have also good dialogue with them and constructive discussions.
Executive Vice President, last month Bloomberg reported that President Trump was pressuring Europe to get rid of the AI Code of Practice, which is the framework attached to the EU's Artificial Intelligence Act. What conversations have you had with this administration about that issue? The administration feels it is too burdensome on US technology companies operating in the bloc.
It shouldn't be, because we see also that it's important that now when we are implementing our AI Act, that we are doing it in very innovation-friendly manner. And Code of Practice is really something that is supposed to help also businesses and industries and SMEs to comply with our rules. So we are still finalizing Code of Practice, but there has been months of discussion with the different stakeholders and public hearings about it, and we are still working on it. But how we want to implement our AI Act is very much that we want to support our industries and SMEs to really develop AI in the European Union. But in the same time, we see that it's important to be aware of the risks.
You brought news with you, and that is the TikTok news today. The EU says that the TikTok ad system breaks consumer protection rules. Why? What is your argument?
They haven't been transparent in their actions. So it's something what is core in our Digital Service Act legislation, that online platforms, they have to be transparent with their actions, and that's why we saw that TikTok is not complying with our rules. So we published preliminary findings today, and now they have time also to review and respond and comply. We have several investigations going on in a pipeline now.
Hanna Virtanen, it has been wonderful having some time with you. We appreciate it, as you said, across all of your meetings and speeches. European Commissioner for Tech Sovereignty, Security and Democracy, on all things EU regulation. Meanwhile, we just bring you some breaking news that Thoma Bravo is said to have sold already its remaining stake in NASDAQ for $3.4 billion. Now, this, of course, is the company, the NASDAQ, that operates the exchanges. And overall, the private equity firm working with JP Morgan on the sale was conducted in an unregistered block of trades on the May 7th and May 13th, so selling the rest of their remaining NASDAQ holding. Shares flat on the day for that company.
Alibaba earnings failed to impress investors as it faces slowing growth in its e-commerce arm and missed earnings projections for its cloud business. Let's get out to Bloomberg's Henry Wren. Those are the two key categories, but what do we learn about the underlying reasons, Henry?
Yeah, sure. Some worrying signs for Alibaba this quarter, and let's start from the core e-commerce business. The customer management revenue was pretty strong, up by about 12% from a year earlier. However, there has been some more signs of competition going on. The company said that it's going to invest more heavily in the quick commerce business, which is an area that already been under investment, under assault by its peers such as JD.com as well as PDD. The company said that its advertising tool as well as higher take rates from merchants are taking effect. However, it's unclear how much of the GMV has been growing for Alibaba. So that has always been a concern for Alibaba because it has been ceding market share to JD.com as well as PDD. On the other hand, for cloud, it's growing about 18% in terms of revenue. However, on the earnings front, because it's still investing heavily on AI chips, so earnings was a miss. And on the sales growth, it's also missing more bullish investor estimates about 20%. So that has been a disappointment as well into this earnings.
And Henry, just go to the AI side of the equation as well, because they've been trying to reorientate. The logistics side was a weaker point, but generative AI and the infrastructure and investment there not quite living up to the hype.
Yeah, indeed. So remember last quarter that Alibaba told us that it's going to be a so-called AI-first company. It's going to be pivoting its strategy to owing not AGI. However, we didn't hear so much about AGI from the management in this quarter. And the company, to its credit, it's still seeing strong demand for AI inferencing. However, it probably takes time to invest because it's still it told us that it's still in the investment phase of this business. And in the meantime, its models, its QM models is generating some revenue. However, it just takes some time to gain traction.
Bloomberg Henry Wren on all things Alibaba and e-commerce. We appreciate it. Let's stick with China because CATL is set to raise at least $4 billion in its Hong Kong share listing, pricing it at the top of the end of the range and what is indicated based on some really strong demand. It's all according to sources. Let's go out to Craig Trudell, who can tell us just how the EV battery maker that is kind of in the eye of the geopolitical storm between China and the US is managing to drum up such support for this secondary listing.
Yeah, and this listing was very much caught up in all of that sort of geopolitical tension where you had, U.S. banks that maybe were going to have a role have to bow out. CATL going back a few years has very much been a political football where, I'm reminded of the governor of Virginia, Glenn Youngkin, was in the running for a plant where Ford was going to license CATL technology, and he pulled his state out of the running and said, this is a Trojan horse. These are just batteries, to be clear, and yet because of the dominance of China in this space, there's a lot of concern elsewhere in the world about how the West can possibly sort of catch up or compete with the scale that this company has now reached.
I remember that story and that interview with Youngkin very well. The frank reality is that CATL is the world's biggest. It is core to the EV battery cell supply chain. Where do those batteries get made and where do they go? And I'm, of course, kind of hinting at Tesla's relationship with CATL.
Yeah, I mean, they predominantly make their batteries in China for China. And so if you want to buy a Tesla and you happen to be in China, you may indeed have a car with CATL batteries. And in fact, I mean, virtually all manufacturers, most of the major manufacturers are at least using CATL batteries in many of their models, right? And so, this is a company that is going overseas a little bit. It is, opening in Germany. It's not entirely reliant on China, but it is very much a dominant aspect of their business. I think that's part of why you have so much concern on the part of governments. It's not so much, completely being, unwilling for this company to supply. It wants, I think especially over here in Europe, there's a desire for, okay, we're open to you supplying to our manufacturers, but you need to build here.
Bloomberg's Craig Trudell. That's a theme for the day, it seems. We appreciate you, Ed. What's next?
Okay, it's time for Talking Tech. And first up, OpenAI has confidentially filed for a Hong Kong listing with an offering set to take place this year. That's according to sources. The move comes as the autonomous driving company announced a partnership with Uber last week. OpenAI declined to comment about the potential listing, and the offering size remains unknown. Plus, sales of China's Xiaomi SU7 sedan plunged to around 36,000 units in April, continuing a lower trend from March after the company faced a fatal highway accident involving one of its vehicles. The company is also facing backlash from consumers over alleged false advertising of the vehicle's hood design. And Baidu is planning to test and eventually launch its autonomous ride-hailing service called Apollo Go in countries like Turkey and across Europe. That's according to sources. The company is in talks with Swiss Post to roll out a robo-taxi service in Switzerland, with testing to start by the end of the year.
Bloomberg Technology's Ones to Watch list. It's out today. This year highlights 10 people shaping the artificial intelligence sector. And Joshua Brustein joins us to talk us through what is a myriad of investors, entrepreneurs, regulators, thought leaders. And I'm really interested in, well, let's start with three we're going to signal out. Luke Farrader. Now, he's a software engineer. We know him for his Doge work, but we should know him for what he's doing with an ancient scroll previously.
Yeah, we actually wrote about Farrader last year when he won a contest to use artificial intelligence to read the words on a series of ancient scrolls that had been burnt during the explosion of Pompeii. And this brought him to prominence. Farrader, also a former SpaceX intern, then got a new position working with Doge. We don't know a lot about what he's doing now, but we do know that a lot of people are trying to watch it, at least.
Sarah Guo has been coming on this program with respect for almost 2 years, so I think I identified her as one to watch well before this list. But Joshua, she's connected. She's influential in Silicon Valley as an investor, but particularly in the realm of AI.
Absolutely. I think she was one of the most nominated people when we went out looking for calls here. Had a history investing in other sectors, notably crypto. Recently has been looking into the AI sector. She's made investments into companies that, if you follow AI closely, you may have heard of, not the OpenAIs and Anthropics, but Mistral, the European AI company, and Harvey, a company that's doing AI for legal work.
I think it's really notable that you've got 50-50 women and men across this particular list. And one of the most leading voices when it comes to the new era of social is Jay over at Blue Sky, and the way in which he's perhaps taken on Mark Zuckerberg at his own game.
Yeah, absolutely. Jay Graber, the CEO of Blue Sky, which actually is a social network that started within Twitter and has spun out. The idea here is to have a social network that you have more control over what you're seeing, what's in your feeds. It's decentralized so that you can't have the control that someone like a Mark Zuckerberg has. And Graber really was notably wearing a shirt that had some Latin writing in it, sort of mocking Mark Zuckerberg for taking to wearing a shirt that compares himself to Julius Caesar.
Bloomberg's Joshua Brustein, thank you very much. And that does it for this edition of Bloomberg Technology.
Do not forget to check out our podcast. Of course, you can find it on the terminal, Apple, Spotify, iHeart. This is Bloomberg.